don't know why I can't hear the audio. Give me 1 second, guys. Voice activity. Oh, it's trying to speak to this. Where is... I'll use this for now. I'll use this cheap headphones. Let's see. Is it very choppy? Maybe I should change to a different streaming method. Let me see. Can you guys see it clearly? He said, brother, can you go through all your setup once and show the times with Silver Bullet? Okay, not choppy. Okay. And you can hear me. So let me go through. I'm going to erase everything. So just to start off, I'm going to go by the indicators that I have on here. I can show you this list. It's listed. I'll take a screenshot of it and put it in the group, but it's listed. I think I have it listed in the group already, but I'm just going to put this in the Discord, in this chat. So you can see and you can test out these indicators for yourself. So what I have are the essentials, which are sessions. So the green is London session. It's kill zones, really. So the green is London kill zone. And the settings, okay. I don't know if I adjusted them. How can I pull up the settings of them? If I click it, will it pull it up? I'm sorry, I haven't really messed with it in a while. Give me 1 sec. Settings. Yeah, I haven't messed with them in so long, I don't even know how to... Okay, maybe this is it. But I don't know if this is going to try to add another one. Yeah, no, that accidentally added something that I don't even have on there. Okay, let me click them and see if the settings will come up. What are you saying? Can you also see settings? Click top left in the eye. My bad. Where's the eye? Not this eye. This is the bottom left. Do you mean within this? Let me see if I can unmute myself. Yeah, try that. Yeah, there's a chat. You guys can unmute yourselves if you want. I just don't know how to, I don't know if I can unmute you guys. You guys can hear me, but I can't hear you. Left click up there, see if there's an unhide the indicators. Okay, sorry about that. Left click, because this is the full screen up top. Left click. This is a plus. I'm sorry, I'm acting very silly about this. Left click. What are you saying? I'm sorry, this is something I need to research. I really don't know this part. But essentially, these are the indicators that I use. Do you use IBDA? Left click up there to see if you can unhide. The unhide button, I'm not sure where that is. I would have to look that up. But what I can do is, what is this? Screeners. Is it on the side? It should be one of these things, right? Settings. Maybe if I, object tree. Not remove settings. Do you use it? I see. Yeah, I just started putting that power of 3 candle indicator on there. Name of the instrument on the chart screen. And then Yeah, no, I haven't used. I didn't put the 4 hour. I think I have the daily candle, but I've been thinking about using that 4 hour one instead. But yeah, I don't know how I hid it, but I have to guess unhide it. Should I Google it really quick? Left click. And I can't hear anybody. If you guys want to talk, like if I don't know if you're trying to talk, but I can't hear you. Left click the name of the instrument. All right, we'll go over the indicator settings later. I'll have to look up a different video. Um, I don't really know, but I think they're pretty much standard. As long as you put your UTC time to -4 New York, these indicators should all give you the relative correct levels. So, just to kind of go over them, we have the previous day's high, and then we also have previous day's low, which is all the way down here. So that's one of my favorite ones, previous day high, previous day low, and I put the list in the chat, and it's also in the thing. As well, we have the session highs, or excuse me, the kill zones, right? So, and we also have session highs and lows. So session highs and lows, I just have a color, it doesn't say it. So blue is London high, and then red down here is London low. So I use all these levels to kind of give me a read on price. I don't like drawing them, I like to have them there automatically. And then for New York session, I don't have the indicator printing New York session high and low, I kind of just trade it. But that's kind of like the premise of those indicators. Excuse me. And then the most important level, one of them is midnight open. So that's right here in the middle. Hey, what's up? Can you talk? I want to see if I can hear you. No, I think it's something on my end. Hold on. Let me try to switch this. Give me a second. Can you say something? No, I don't know what it is. I need to fix this. I have to change the settings real quick. Settings. What does this say? That's the camera. This is the audio. Input. That's fine. That's me. Output. Let's try to change this. Speaker. Can you try again? Mic? Sorry. Nothing. So, I don't know. I need to fix this. But we can still keep going, and I can read the chat for now. And then I have to do something with my speakers. I'm not sure what I did to them, but for some reason it's not working. All right. So I'm just going to look on the right. In library, brother, you look like a Viking of future props. Okay. So we have all these levels, which ICT, he's always talking about draws on liquidity. So all of these levels are really just a draw on liquidity, which is like the key that you need, because that's kind of directing you to where you're going to be targeting, and then also where you're going to be taking profit, where you could be entering. So every level that's indicated is a draw on liquidity, right? So we got London low, we got London high, and I just know that because of this line and this red line, like that's the indicator. We got midnight close, that's a draw. We have previous day's high, that's a draw, and we also have previous day's low, which is a draw, which is down here. Now, the day before Friday, on Thursday, was it Thursday? Or maybe the day before. It was the day before. It was Wednesday, I believe Wednesday. Wednesday, we had a previous day's high to previous day low trade. And those are my favorite type of trades, right? Previous day high to previous day low. So I'm going to label that as my number one setup. So number one setup is previous day high to previous day low. Now, if you catch a previous day high and a previous day low setup, you're going to catch like the whole daily range, and it's going to be more of like a reversal setup. I'm going to zoom in, and we're going to talk about more setups, but my number one setup, which I think Jade Cap talks about this, and I'll put the video that he talks about it, but previous day high to previous day low. because you're in a premium. Now with ICT 2022 mentorship, he talks about premium and discount. So that's basically if you just measured like a fib level, right? Anything above 50% is premium, and anything below is a discount. Now ICT does frame it different. He uses like a buy and sell kind of thing, like this, so it looks just like this. Or he'll use the fib and he'll change the level. But basically, the idea is you don't want to be buying above 50%. You want to buy below, right? And you don't want to be selling below 50%. You want to sell above. So it's premium versus discount. So that's one thing you always want to keep in your head. The top setups are going to be previous day high to previous day low. And if you're like, I'm an intraday trader, right? So if you're a swing trader, then maybe you're looking for like a weekly or a monthly. But if you have these setups, previous day high, previous day low, there's a lot of room to like add into positions. And I'm really scalp. So I really go to the lower time frames. But just to frame the day just a bit, right? I start trading at about 9:30, and recently I started looking for entries only after 10, because what happens is that 9 o'clock candle is a 4-hour candle beginning, and it's going to run both sides of liquidity. So I'm going to zoom in, and we're going to see at that time how we ran liquidity and how we were going to be able to get in the market. Mind you, there's a lot of ICT concepts I can frame right now just to show. And I don't know how much you guys really know about ICT concepts, but for instance, this overall market was downtrending. So the last up close candle in the downtrend is considered a breaker block. Right? So this is, someone would call this an order block, right? But it's only a breaker block once it's broken. So it's an order block that's broken, becomes a breaker block. Now, why that's significant is you can take entries based on just breaker blocks. And also, if you see a fair value gap lined up with it, it's called a unicorn, right? So my number one setup is previous day high to previous day low. That's like framing the narrative. But as far as entry models, I use turtle soup, I use unicorn, and I use fair value gap. So I'm going to put turtle soup. That's like the entry models. So turtle soup, unicorn, and we can say 2022 model. Or we'll say silver bullet. Silver bullet. Those are the main three entries. Because I don't like having only one way to enter. I want multiple ways to enter. And then I can show you guys like the different instructors who have the best teachings on each entry, if that makes sense. So Justin Werlin, he has a good teaching on turtle soups. Dodgy Trades has good teachings on trading news. And I'll go over all of them, but and then for the previous day high to previous day low, I love turtle soup. That was actually Jade Cat. Now he has about 10 years. I'm about 8 years in, so I think I should be able to get to his level, but he has a lot of good information. And I didn't really watch like any of the core content like that, but that's what he mainly watches. So Jade Cat has the previous day high to previous day low entries. So it all depends when you're available to look at the market, but everything is based on time. When this blue box ends, it's about 10 o'clock. So that's when I'm supposed to get involved, right? At 10 o'clock this day, this was a news candle. It was an orange folder. Okay, I don't know if I'm going too fast, but what I want to do is anytime there's news, okay, I don't know if it paused my stream, if you can see me, sorry. Let me turn off this camera. Okay, so that's probably what it was holding up, maybe. I need a better internet connection. Give me a second. But we marked off the breaker block. The reason I marked that off first, that's the PD array that my eye sees first. ICT has over 80-something PD arrays. I don't know which ones you guys have been studying, but for me, a breaker block indicates a market structure shift because it was an order block that was broken, right? Show ICT silver bullet times. I think ICT revealed 5 times for silver bullet. There's plenty of times for silver bullet. He honestly said in another video that there's a silver bullet every hour, right? All it is that you're trading an inefficiency within a candle, and then you're framing with a higher time frame. So I would say 10 to 11 is 1, right? Also 2 to 3. Those are my favorites, right? But I can also tell you there's another person I've been studying named Jermaine Trades. He shows the end of session, so it's like a 3 to 4 or like a 4 to 5 kind of trade that's really good, and an Asian session trade. And that's just, you have to know liquidity. So what I really want you guys to understand is, if you don't have the drawn liquidity, if you don't have liquidity outlined, you don't have a trade. You have to have liquidity outlined. Liquidity has to be outlined. I didn't jump on the weekly and monthly time frames because that's not how I start my trading day. I can just hop on there and I just look for levels to be ran within like a 15-minute time frame, and then I'm scalping basically on the 30 seconds. So you guys can frame it on a higher time frame, but just to give some perspective, right? This is the same day, right? Oh no, sorry, it's over here. That earlier we marked up an order block, but on the lower time frame, right, there was no fair value gap. On this time frame, there is. So I'm gonna change the order block or the breaker block. I'm gonna label it correctly so you guys can understand, because I know it's kind of like a new concept to some of you. So we'll label it. We'll put order block or breaker block once broken or invalidated. This is all being recorded too, so I'm probably gonna just try to upload it to the YouTube. But this is an order block or breaker block once it's broken or invalidated. Now, old ICT, I struggle with where to mark up liquidity. Seems very simple, but nothing I've watched has explained it well. Struggle. That would be great. So the first thing you want to do is you want to gravitate to the higher time frame ones. With the indicators I have, it gives you them. Previous day is high, previous day is low. That's the first two levels you want to frame, because you can build enough trades within there. Then you're going to look at the session highs and lows. Then you can look at candlestick highs and lows, and then data highs and lows, such as the news, which I'm going to frame. But first draw on liquidity is previous day high and low. Mind you, once you get more advanced, yeah, look at weekly, look at monthly. But if you're scalping, you're on a lower time frame, if you look at the previous day's highs and low, that'll give you a pretty much good framework. The second would be session highs. Second draw session highs and lows. And also midnight close. Now, midnight close is a level that's the most important, because what you're going to see is, and this is outlined in JadeCap's. JadeCap put out a video talking about how to catch previous day high, previous day low, and why midnight close is so important. So what you want to understand is this big candle on the right-hand side. I don't know if you guys can see my screen. Hold on one sec. It says stream is still running. Can you see my screen still? Okay. So this candle that's green, right? What you have to understand is, if you look where this yellow candle is, right? If it's a buy side candle, we want to get in below this yellow candle, or excuse me, below this yellow line, which is midnight close, and that's it. We really don't want to get in and buy above it, because we want to be relative to the premium and discount. We want to be below the 50%. So let's just say we marked up this green candle alone. Is it a coincidence that this 50% level is exactly midnight close? That's confluence. So in the old retail stuff that we learned through Wall Street Academy and all these other places, once we have confluence, we start looking for trades. I'm giving you guys a whole bunch of concepts. You don't need all of that. The most basic one I learned is OTE, which is just a fib pullback. And within the fib pullbacks, 61.8, which I don't have marked on here, right? Because for me, I'm only looking at going behind 50. Once we go behind 50, I put 78.6, that's fine. But I know that once we're behind 50, I'm looking to frame a trade possibly to go long, and the stop has to go below the 1. I'm going to delete the fib just to show you the unicorn entry that's presented here. That's the first model, or that's the easier model that I would frame for you guys. So it's going to be the last up close candle in a downtrend, right? That's going to be a breaker block. Last up close candle. And I put a lot of videos in this group where you can look and see what all of these things are. I'm going to formulate all the chat so it has very specifics of all the different models. But the last up close candle in a downtrend is a breaker block. Once it's broken, if it's not broken, it's just an order block. And then vice versa. So the last down close candle. And that ICT used to just teach that alone, and it was so powerful because you could trade breaker to breaker. And most people who are trading support resistance, they're looking for the full extreme to be taken out. when you're looking breaker to breaker, you're basically just trading 78.6 to 78.6. You're not even looking for the extremes to be taken out. So the last candle uptrend, I'm just trying to fix this real quick, and then I'll read that question. Hold on. Uptrend is a breaker once broken. Last down closed. Okay, your question is, so that breaker block is basically where liquidity was swept. So what that is, let me frame where liquidity was swept, okay? This is an order block and breaker block, right? It indicates a market structure shift. I'm going to put that in there. This is what you want to know. Indicates a market structure shift. Now, in the past, sorry, let me fix this. Now, in the past, the issue is most people who learn ICT learn market structure shift as, okay, when this level is broken, this is a market structure shift. Yes, that is true. But to find a market structure shift faster, all you have to look for is a PD array to be violated. So when an order block is violated and turned into a breaker block, that is a market structure shift. When a fair value gap, the bearish fair value gap is turned into a bullish fair value gap, that is a market structure shift. So when we go on a lower time frame, we're going to see a bearish fair value gap that gets turned into an inverted fair value gap. I'm just going to show you that really quick and we'll go back up. But just to show you that the last bearish fair value gap that gets invalidated is a market structure shift. There's multiple, but we'll probably go lower and see. I'm going to 1 minute. Okay, so this might seem silly, but okay, if we're looking at the last downtrend, right here, this is the last downtrending move. I'm going to zoom into it. Sorry, I'm going to use lines. I'm not going to use a box. That way, when we zoom out, it's easier to see it. So, if I put a horizontal line on the last fair value gap, that's a bearish fair value gap, which is just this little area right here. This area, once violated, indicates a market structure shift. So this fair value gap, which is supposed to typically be sells, whenever you have a fair value gap, it's typically supposed to sell out of it. When price goes back, like right here, this is a fair value gap, right? Price came back, kind of breached it, but still ended up closing below. On this fair value gap, price sold it, but then eventually broke above. That right there is the lowest, unless you're going to go to the seconds chart, which I can do too, but that is a market structure shift right here. And I used to label it like this, like market structure shift. But for me, I prefer to look at market structure shifts by looking at fair value gaps being invalidated. Because you can see a whole bunch of candle bodies like that break each other. Like somebody could look at this and been like, oh, this is market structure shift. But then what happened when price melted? You want to look for PD arrays to be violated to indicate market structure shift. So look for PD arrays to be violated to indicate market structure shift. Now, Mike, the first thing you said is, I don't know the draw. When you come to the chart, you don't have to create a random draw, right? I know I put a lot of stuff on here. I'm going to zoom out just to show you where, like, that inverted fair value gap right here that I didn't label, that I should have labeled right here, that's an inverted fair value gap. Inverted fair value gap right here. Price respected it, right? If you put a buy here, potentially, and you put your stop below the low, 33 points, one contract on NQ or MNQ is $2 a point. This would have been $66 risk, and I usually target 1-to-1, and then I add to my winners, right? But the draw, this is the big thing we all want to know. What's the draw? Look at the lines that are already printed on the chart for you. We have previous day high, and we have London high. Those are the first two areas you're going to indicate to target, right? Anything else would be gravy that you would just have a runner. We want to keep it simple and just, you want to start stacking up wins and start being able to read market structure. So the main things you want to know are order blocks, fair value gaps, right? This is an inverted fair value gap down here, and it's kind of hard to tell because it's kind of zoomed out. But I'm going to go to a higher time frame just to be a little bit more clear about this. Any questions really quick? Sorry, I know I'm all over the place, but The draw on liquidity is going to be one of these indicators that's marked here. And if you don't want the indicators, you have to simply go on the monthly time frame, mark up the highs and lows, go on the weekly time frame, mark up the highs and lows, go on the daily time frame, mark up the highs and lows. But with this indicator, I just trust it. Like I come here to the market and I wait until, I used to wait till 9:30, but you want to wait until 10 because let me show you what happens at 10, right? This was a red folder day. I'm going to just, there's so many ways to possibly trade, but I'm going to just show you concepts that I've learned. Right here, this is going to be the data high because that's the 10 o'clock news candle. This is a right here. This is a strategy by itself. Data high. You don't, because everyone's always scared. What do I do on news days? I don't know what to do. What you want to do is look at the news candle, get the data high and the data low. This is an automatic draw on liquidity. So if you ever have a question, oh, what's the draw? On a news day, you want to see these levels be breached, right? This is the 10 o'clock candle. We're gonna zoom in. Right? And I took this trade. So what happened is price purged the news candle and there was a turtle soup entry here. Right? So I'm going to put a little thing here, turtle soup. Turtle soup. And turtle soup entries simply mean that price violated and wicked into a higher time frame PD array. That means we're above previous day's high. We hit a fair value gap. We hit a fib level. Right? So it's a turtle soup entry, sell, right? I didn't take the sell, I marked it up though, right? But guess what? The draw that we're going to are all these lines here. Previous day's high, London high, midnight close. This is, I think this is London low, and then this last one is the data low, which is the news candle. I'm sorry. Yes, it rotates into news candle most of the times. Yes, but we want to have a framework to trade it. Yes, we'll know it's going to retrace into it, but we got to think, all right, so if we sweep, when news happens, right, we swept this candle right here. We swept this level. I'll change the color, and I'll change the thickness. Once we sweep liquidity, I'm like a reversal head. I'm a contrarian. I'm trying to make this thicker. Sorry, it's right here. I'm a contrarian, so I'm looking to frame reversals when we sweep liquidity. This news candle swept this level, that's a run on liquidity, right? If we go to a lower time frame, right? For someone to enter here, it's pretty aggressive and there's not like a clean pullback. There's a fair value gap. I'm going to delete this. There's a fair value gap, but it wasn't clean enough or a pullback enough to enter. That's not something I would enter off of, right? But the buy side trade I definitely took because what happened was we came down to the data low. We failed to take the data low, right? If we fail to take a level, what win rate do you get with 1-on-1? My win rate is, it depends on the account and the company. Like for instance, I was like on a 3-week win streak, but that's like profitable days, not each trade. My win rate is like 60 to 80, just depending on the streak, the time period. But as long as you're 50-50 and you add more to the winners, it doesn't matter. But you got to look at strength and weakness, right? So when price came down to this level, the data low, we failed to take the data low. Also, we swept this red line right here it's London low. I don't have it labeled. That's just how the indicator works. It just tells you that. So in the past, I want you to think of like the old support resistance stuff we knew. Yeah, I've seen 40% win rate with all day green for 40 days. Yeah, it's really just, it's all a myth, bro. ICT's son got payouts having negative RR, and I think I had negative RR for like 2 months, and I made like 30 to 40,000. So you can make money having negative RR. It's more so just about adding to the winners. But for the London low, right? When you use the frame support resistance trades, it's like you believe that support's gonna hold. That's the same framework we want to have with these levels. London low, look how it supported price the whole day. You know what I'm saying? So it's very key. This is the first I've heard of data low. Yes, this is from Dodgy Trades, and I recently started using it, and it works really good. And yes, there's candlesticks all over the place, but you don't just take every trade. What you want to do is the easy trade that you see. So I'm going to show you the easy trade I see. We failed to close below London low because we wicked it, right? The bodies respected it. And we never really breached the data low. If you look closely, we never actually breached it. We might have just, okay, technically we wicked it. That's fine. And also, the major level I want to tell you about, when we're in a buy day, right, and we expect that bullish candle, we want to buy below the 50, right? But the last entry we want is going to be this yellow line, the midnight close. Because when the candle builds, this is typically the candle body low, right? So that's already multiple reasons people could take trades without actually looking for like a PD array. Now I'm going to show you the PD array that I took, and I record this on video, and it's on my YouTube, and I think I could share you guys the official full length video. This is an inverted fair value gap. So what is an inverted fair value gap? It's a fair value gap that doesn't work. It gets broken. This bearish candle has a gap between, you guys know fair value gaps? If you don't know fair value gap, we can go over it more, but honestly, that's something that it's a lot easier to learn from someone else. This is a little bit more advanced. This black line, right, indicates the fair value gap. The fair value gap never gets used to go to the sell side. It fails. It's an inverted fair value gap. So what I know is when I see a fair value gap on top of one of these levels, right, and we're already having weakness because you see this wick, I'm potentially looking to go that direction. So for me, I go on a lower time frame. Now you don't have to frame your trade like this, but futures is a lot different than the Forex space. I'm going to be honest with you. You can be done with your day a lot quicker, and you can still manage your risk really well. You just have to zoom in and actually use a stop loss. So if you zoom in, what we have is confluence. We have the inverted fair value gap, which I'll label right here. It's on top of a great draw, that every draw could be an entry or an exit. So it's an inverted fair value gap. It's on top of midnight close. Or midnight open, whichever one you want to say. Midnight open. Should make this smaller and fix the spelling. I know I'm all over the place, guys, but if you could just take the levels I'm talking about, previous day is high, previous day is low, data high, data low, that'll be able to tell you where to trade. That's mostly half the battle, knowing where to go. So with the midnight open and the inverted fair value gap being here, right? And we got, those are two reasons you could take the trade. The third confirmation is there's an actual fair value gap to go on the buy side of the trade. So a fair value gap, there's multiple actually. And when you have them overlapping the inverted fair value gap, that's a great reason. So this bullish candle pushes up. The wick before it and after it doesn't overlap. That's considered a fair value gap. I'm going to change it to green. That's a fair value gap. Or a BISI, buy side inefficiency. And then the sell side would be SIBI, but it's a fair value gap or a BISI. I know that's a lot. Yeah, major liquidities, easy money, PDF. That's really the main thing, in my opinion. I'm not saying that like I'm the best teacher. That's why I named other people who like have the answers. But I'm telling you just how I kind of look at all of it together and the different entry models you can build. So if you decide you can see inverted fair value gap good, Dodgy teaches that, and I can help you refine it. If you want to trade fair value gaps, just regular fair value gaps, 2022 model's the best, and JCap also teaches that pretty well, and I can help you refine it. But there's another fair value gap here I'm going to mark up, just so you could see. Because you don't have to worry about, oh, I missed my setup. Like, there's going to be an inefficiency in price that lines up with another inefficiency that you can take, right? So this is an entry, this is an entry. That's two entries that line up with this inverted fair value gap. Let's say you missed this entry, even though I prefer not to enter anywhere farther than this, right? The other entries, you'd have to wait. So you wait till price came up here, and then it doesn't break this level. So this level is considered what? An order block. Because it's a part of price where there's orders. It's the last, sorry, let me see this. It's the last down close candle in this uptrend, right? And it doesn't get broken. The wicks pierce it, but it gets respected by the candle bodies. That means this is just an order block. So that might mean we might, like, we're still technically have bullish order flow because this order block is being respected. And this is the 30-second time frame, right? So let's say it came back here, you didn't trade it here, and it came back here, you didn't trade it here. Price came back here. Maybe you take this one, but because there's like an inverted fair value gap here. Either way, my point of just showing why like these levels, if you put a long position on there just to see what it would look like. If you put your stop below that last wick, that's a 13-point stop, or like 14-point stop. That's like $28. And then if you targeted the highs, that's a what's it called? $70 profit. So when you don't have the clear draw, you just target candles at that point. Instead of targeting candles in the beginning, you should use all the other draws of liquidity. Then, when you don't have those, you target the actual candle body highs and everything of that nature. How many trades do you take in a day? It depends, because since I have so many accounts, I'll switch between a whole bunch of them sometimes, or I'll just trade like once and stop. But I trade between 9:30 and 11 and 2 to 4. And then now I stopped trading at 9:30. I only trade at 10 because somebody who's more successful told me you're better off waiting for the deck to be cleared because 9:30 has a lot of congestion. And he's right, because usually when I used to get in at 9:30, I'd have to get out quickly because price would reverse and then go their full direction for the day. And I'm already just like profitable, but I'm hungry thinking, oh, this position is good. But the true direction of that 4-hour candle, a lot of times I was on the wrong side of it because I was trying to get in early. But I would say wait till 10 o'clock. How many trades do you take per day? Oh, that's what you just said. How many mini contracts do you use? I use micros. So I don't even use minis. That's why I'm on MNQ. I'm not even on NQ. I don't use minis at all. Because if you're on this chat, you shouldn't even use minis because you don't understand the risk of it. Even bringing it up is like, you don't really the prop firms they let us use, let's say a 50K count. It's $2,500 drawdown, right? So $2,500 drawdown. If you're risking 10%, that's $250. With a mini, it's $20 a point. So look at this tiny stop loss that we tried to frame for 13 points, 14 points. With a mini, 20 times 14, that's a $280 stop, right? For me, I would prefer to do a micro. So hypothetically, one micro would be a $26 stop. And then I can build into the position. And especially if you don't know anything about it, it's like minis are just a trick. The only people, even trades by Matt, the biggest, I trade 20, copy and trade all this. He built up a huge buffer. He blew his whole account up with minis, with micros. Yeah, micros are key. ICT Sun was on a streak with micros. I was on a streak with micros. I've never used a mini. I used a mini the first time I touched Apex or Chop Step. I was like, let me try to pass this challenge with a mini. And I was like, what the hell is that? And then I went in Apex and I read through all the top earners and they all said to use micros. So once I read that information, I never used a mini again. So that's just me telling you that. What else did anyone say? So you only legit take entry on a 30-second chart. Man, I'll go down to the 15-second chart. The time doesn't really matter if you know what levels you're looking at. The problem is, if you don't know the level, you don't know what you're looking for, you can't trade it. So right here is a good one. 15-second chart. These are the key levels. Look at these key levels. This blue line is London high, and this red line I think is previous day's high. We have an inverted fair value gap right here. Price, market structure shift, takes out this gap, it becomes a buy side gap. Bam. 15-second chart. But you're really only looking at the 15-second chart when we get to these levels. So either you have to mark them up, or you got to use an indicator to have them, and you only use these time frames once you're at a higher time frame level that makes sense. Now, once we shoot above all these levels that are marked previously, you got to be careful. You can get a payout with 2 to 3 making 2. You could. The thing with Top Step is, where they get you is, they let you withdraw 50%, right? So people make 1,000 and withdraw 500, and then they have no drawdown left. Like, it doesn't make sense, but Top Step X is really good because you can actually use as much micros as they let you use in the challenge. But when you use regular Top Step, they lower how much you could risk, so it just becomes annoying because they trick you into using minis because they only let you use 2 micros until you have $1,500. So only use Top Step X or use another prop, in my opinion. Yeah, fuck minis. I agree. But let me what can I do? Let me frame another trade real quick. Let me go on a better time frame. Let's go on the 5-minute. Okay, let's frame a trade. Okay. So hypothetically, what you could do is you could use what's called OTE. Now, OTE is a retracement into the 618 or 78.6 retracement. So what you would do is you just mark the move that violated, like London low, previous day's high. You can mark the entire move, and then whatever the retracement is, essentially under that 61.8 or 78.6, you basically enter there. Now, you can combine that with a fair value gap, like right here. And this is just preference. Like, some of us don't want to overcomplicate it with the breaker blocks. To me, the breaker blocks are simple. I've seen someone with 40% weight. At 40 on. Till 4, stop loss of list. The thing about it is, and I'm going to be very honest with you. Very, very honest with you. I have a friend who put me on ICT, and he's the person who looks for trades till the closing bell. And I passed him because as soon as I get a profit, I close it up. So I'll literally stop doing this at 10 o'clock or before, because I was getting it at 9:30. I'll start doing it by 11 o'clock, and I'll go to my brother's house and smoke, or I'll go do something else. I'll go for a walk with my baby. I'll go do something else, because what you want to create is a habit of like doing less. If you really want to pay yourself, you got to actually like have less hours on the clock while you still make that same money. If you're just sitting there all day, you could be tape reading, right? But if you're just sitting there destroying your accounts, it's no point. You're better off doing 1 to 2 setups a day. The reason I trade a lot of accounts or a lot of setups is because I have so many accounts. I traded Apex to trailing drawdown. I was nasty, lost all accounts. The thing about trailing drawdown, you have to learn to love it. It teaches you how to take profit. It forces you to be a scalper. If you're not a scalper, of course you're not going to like it, but guess what? There's only like 2 futures firms, 3 futures firms that don't have that. And that would be Fast Track Funding, My Funded Futures, and I think Top Step just removed. They don't have trailing. They have end of day, but it felt like trailing because they had the $1,000 auto stop out, which they took out. Top Step has yes, they have end of day. You're right. You only have a 25K funded. 25K is enough. I saw somebody take out like $70,000 just trading 125K and building it up. Top Step X is the best where you could build up profit. I'm going with Apex Static now. The static doesn't make any sense because it's only a fixed drawdown number, so you don't get the benefit of every other trader. They get the benefit of growing their drawdown, and they have the buying power of the $2,500. You're gonna only have the drawdown of the 600, which is basically what you put in. So your risk is higher. You have less to actually lose, and then as far as profits, I don't even know how they break that down with you. But the trailing thing, bro, I'm gonna tell you this: it's not gonna go away until Fast Track makes everyone change, because eventually they may take it away. But the trailing, if you can master trailing, then the end of day drawdown prop firms are a joke, right? And then like trailing is, honestly, you know what trailing is saying? You're over leveraging. If you can't handle trailing, you're over leveraging, because if you have a $2,500 account and you go up $1,250 and don't take profit, you're over leveraging. If you go up $500 and don't take profit, you're over leveraging. There's no way you're up 20% of the account with no profit taking in there. How do you manage trades? I pray to God. You want to leave there. You want to leave the market with your ass. Yeah, you over leverage. Yeah, that's me too. I used to be the same way. The thing is, every prop has made me better. So instead of getting mad at the rules, I learned them and I mastered them. And I started with Apex, the hardest one. So that way, when I touch the other ones, it's just easy. And now they're coming out with prop firms where you don't even have to pass a challenge. So this shit's a joke. If you could actually just under leverage and use 1 to 2 micros, you could get to a payout like this. Fast Track Funding pays, they let you request a payout in 10 days. Yeah, I could over. Bro, can you show the copier once you share the link here? The copier. Everybody's copier is going to be different. I use Rhythmic account, so I use Quant Tower. I could pull it up, but I use Quant Tower. Oh, you want to see that? Quant Tower. So, I'm trying to load it up right now. But it's basically different for everybody. If you use Rhythmic, it's going to be Quant Tower. Or there's other versions of it, but for me, that's what I use. And there's like a little copy trading menu thing, and I'll show you if I can show you. Sorry, I heard a noise. 1 second. I don't know. Will it let me share that screen? Give me 1 second. Essentially, this is the least of your worries, because once you get the accounts going, it's gonna take one video to set up the copy trader. Now I can show it to you, but the problem is it's not gonna show you because it's so many different like windows that if I try to let me try to share my screen and see if it'll show it to you. Let me see something. Give me 1 second, and then I'll answer the other questions. I know I'm kind of going all over the place, but stop stream. Okay. Share your screen. Yeah, for some window, entire screen. Okay, it says I can share a window. I'm gonna share it with you. So this is just the window. It looks pretty boring, but essentially you'd press plus, you create it, you name it, you create it, whatever, description. I usually just put the name of like the challenge number so that it stays available. Everything says NA above. Can you see this actually? I don't know if you can even see this. It all says NA because none of the brokers are loaded up yet. It all has to connect, so it takes a little while. But essentially you'd put the, yeah, it's not going to show right now. But you'd put the account that you'd want to lead and the parent, and then you put, well, you put the connection. You'd say Apex. Then you'd put the account number, Apex, da da da. Then you just click this a whole bunch, and you add different accounts, and you change the leaders, and there's only one option. They let you multiply it. That's it. This copy trader is so simple. They don't have a whole bunch of like flexibility with stuff. I'm sorry. I'm going to change back to the other thing. Once it's a live day, I can actually go over this a little bit better because this is not going to really show anything at this time. Let me go back to the screen. Sorry, everybody. Give me 1 sec. Because that part, you could see a video on it, and it'll be a better explanation than me. The value is really just knowing that, yeah, TradeAway built-in copier is cool, but it doesn't actually take the stop loss as good. You have to set a limit and a stop. You can't just like drag it and see, this is the stop loss. So I don't like that. Quant Tower, you can see the stop loss, you can close all your positions. I do like the close one feature on TradeAway, but I've used all of them already. I've used TradeAway. I didn't use Replicanto, but my friend trades off his phone and he used Replicanto, but you have to have TradeAway accounts. So I don't have any more TradeAway accounts except for some challenges with, I think, TradeAway. Okay, let me read the chat real quick, because I've just been rambling. I need to see what you guys said. Hold on. Where did it go? Inbox? Wait, how do I pull this chat up? I'm sorry. I'm trying to remember this. Whew. Okay, so aside. Show chat. I've seen someone lose all accounts due to their copy. What platform do you prefer to trade? Yeah, you can lose all your accounts due to copy trading, and you're responsible. I just put up a video on YouTube on Friday. All my accounts got locked. Like, all the rhythmics logged out while I was logged into them. So now I'm not going to trade all of them together. I'm trading in groups of like 20 or groups of 15. Because at that time I was very upset, and I was at my highest possible profit that I've ever had. So I got lucky, didn't blow everything, and I ended up winning for the day like 20 bands, but I was at my highest possible profit and I couldn't close it out. I'm just going to stick to that's the best thing you can do right now. Top Step X is going to pay you the best. That's the best option in my opinion. Once you get that money going, you have a bankroll, then you scale. As soon as I have Apex going good, I scale. So that right now I'm going through a dispute with Apex. We're not a dispute, but they're asking me to send videos because I made a lot of money with them. So they're supposed to send me more money. But until then, I'm just getting paid from the other props. So you definitely want to diversify. Can you copy between them? Yes, everything's well, Top Step X you can. They're coming up with a new copy trader, I think by the end of the year, where you can change certain stuff to make the multipliers different. For sure. Okay. I know I kind of went over a lot of random stuff. You have a question that maybe I could try to answer? Because the draw on liquidity is super important. Previous day high, previous day is low. Session high, session low. Midnight close. That's it. And there's like 3 sessions, so that's 6 levels. Previous day high, previous day low, that's 8. Midnight close, 9. You have 9 super strong levels to look at before you even guess the random one. Oh, nice. I think we should go to Apex when you have enough money till then. Use terms with you. Yeah, I mean, I told my friends the same thing now because I realized I was doing it the harder way. But I was obsessed with the 20 account thing. See, especially if you're fine with 1 or 2. And if my friend, he's making at least 5 to 10K with 2 accounts with Apex. I mean, with Top Step. So you don't need to have like 60 something accounts. You could have 1 or 2. Yeah, Apex scaling is crazy, but that's the thing. Like a lot of the firms are trying to copy them too and grow in how much you can scale. I'm gonna scroll back to a different day. It's been helpful. Cool. I'm glad. I haven't really been doing these as much as I should because I kind of got really obsessed with my own personal profit. But I want to start doing these more. I'm not saying I'm the best teacher for everyone, but I'm just saying that I can guide you to the people who know it the best, and you can come and ask me a question. Yeah, bro, ask questions. Of course, you can just message me on here, message me on my phone, Instagram. But what you want to do is you want to look at like key levels in the market, right? So like in this downtrend, the last up close candle, that's an order block that gets broken into a breaker block, and it has another thing right here which makes it a unicorn entry. It has a fair value gap. So when you start to see these little things, this is the entry, right? But one thing that's good about a buy entry like this, we're below midnight close. That's very key. If we're in a buy, we want to be at or below midnight close or previous day low or London low, which this red line is London low. So that means when we bought this, we knew that this candle was going to end up being a big bullish candle because we're below this level. Now, if we reject it here, that's a sign we could reverse. But if you look closely, there's another fair value gap that we actually wicked into right here. And if you use like that OTE stuff I was talking about, you could put a fib from this level to this level, right? And price retrace to that 50%, 61.8 as well, which I don't have marked because I just know it. And that would have been an OTE slash fair value gap entry. This happened the time. Sorry, I moved this. The time was 11:55. So if you bought this and you put your stop below, you can put your stop below the candle that creates the fair value gap, or you could put it behind the structural level. But I would say behind the candle that creates a fair value gap. One contract would be about $104 risk. You could target the highs right here, which it hit. That's a 3.5 to 100. Let's just say 172 points. So that's about $350 for 100 something dollars risk, right? That's one trade just based on a pullback. Now that's more closely related to that retail logic of Fibonacci. The thing about fibs is you got to know when they're invalidated, right? So if we're measuring this, if we keep measuring every bearish push, right? And the less we come back to the 50% level is it indicates what's called as a low resistance liquidity run, or it's very strong in that trend. I learned a lot more tonight than a lot of 10-hour videos. Damn, that's crazy. But again, if you have questions, ask me and I'll point you in the right direction. So this push or this level that we measured, right? For me personally, I may have been looking for a trade up here, but irregardless, let's just take this fib to the next level. After that green candle closes, like we're looking for like a red or green together to form like, what's it called? The swing point to put the fib on properly. So let's say we put the fib on this level right here, down to this level, right? Price comes back to the 50%. That could have been a sell. Now, if we go on a lower time frame, wait, were you saying something? Yeah, I want to get 20 like Big Bruce. Main will be top. Yeah, Top Step X can pay you more than I made. If you really lock in, you don't need 20. It's a trick mentally. Because the thing about Top Step 2 is like it's lifetime. I was paying a lot of like monthlies with Apex and I was getting used to futures. And when you're getting used to futures, you should probably have a lifetime account, not the monthlies. But at the same time, like if you look at Lanto and Kane, like they're running it up. Wait, it's back here. They're running it up with those firms alone, and they are making money with Apex too. But Top Step X is paying them so much. Damn, I don't know. I think I lost that shit. I should have highlighted it better. But what was the premise I was going off of? Oh, it's over here. I was trying to show you guys how if you want to have a lazy approach, you could just take the fib and mark off a level and wait till it comes to the 50%, and then look for a PD array within that. And I know I'm just like zooming. Sorry, like a fucking idiot. Sorry about that. But okay, this was a level that I marked up here, down to this low, or whatever. So it's after this that we get involved. So when price comes back, and then we can mark off levels. There's different stuff you could say here, right? You could say the last up close candle in the down close candle in the uptrend. This little yellow candle right here. Oh, this is a breaker block. Okay, price comes back into it, sell. Or you could say that it's just another fib level, like within this overall push. Oh, we're above 78.6 and we hit the 50 on the higher fib close. But you can't just use fibs blindly. You can't just put fibs on a level and what happens with most people with fibs is this. They're going to come to it and they're going to measure this. So every time we come down to this level, down here, people are trying to buy, like, oh, it's going to go. It's like, there's liquidity here. It's liquidity. It's literally midnight close. Like, you don't want to be taking a buy when there's liquidity that's not ran. Look at this wick. This wick right here is liquidity. I bet you this was news. I don't even know what day and time this was. This was probably news. This is at 8:30 on Wednesday. Let's look it up. Forex Factory. Forex Factory. I don't know if you guys can see my screen. It's probably only on my screen, but I'm going to look it up real quick. Wednesday was the 9th? Oh, no. No. Wednesday was the 11th. Was that the 11th that we're looking at? This is the 11th. So, yeah. Wednesday the 11th at 8:30. Oh, what do you know? Watch this. You can just paste shit on here, I think. Paste. Okay, yeah, so I pasted it. So that's it. There's an 8:30 news event. What do we say about news? We got data high and low. And this tool, this thing I recently learned from Dodgy is actually really good. That data high low shit is really good. So what happened is, we have news at 8:30. The same trade that I framed before was like an inverted fair value gap to buy up the news, right? This could be taken to buy it up. In here, there's a fair value gap. This is a lower time frame, so you might not have found it, whatever. But once price reaches that news high, right? All we're looking for is a market structure shift to indicate to get in. Now, I'm on a lower time frame, so I'm zooming in. This is 30 second, right? Market structure shift can be identified in a few different ways. There's an inverted fair value gap right here. I'm going to zoom in, which was a bullish fair value gap that never gets used to go up, or it gets invalidated and then it gets used to go down. So once we breached it here, 1, 2, 3, 4, 5, 6, that's 6 times 30 seconds. You got 3 minutes to take a sell here. Fine. You don't catch it then. You let price break down. Cool. This level right here is considered an order block. Right? Price retraces back into it. There's also a fair value gap right here. You could take a sell and put a stop loss above this level. Above this level, it's really up to you. This is the 30-second chart. So just remember, if you put a stop loss, just to see like potentially how much it would be. Let's say you enter the trade at the overlap, because you want to get a trade at an overlap of some PD arrays. Even if you put your stops at the high, it was only 38 points. Let's round it to 40 points. That's $80 risk, and let's look at the potential downside. Remember, we're taking a trade above the data high, and we're targeting what? The data low. Data low. And guess what? The data low lines up with midnight close. So maybe we might take profit at midnight close. But also, think about 50% of this range. So you should know what half of something looks like. But if you don't, you put this fib on there just to say 50%. That's called the consequent encroachment. That's another area you want to potentially take profit. It's kind of like just making sure that price is still trending that direction. Because if we heavily reverse at that level, that is an indicator that we're going bullish. That I think was CPI. Look, I put it right here. It is CPI, 830. But I'm just telling you how simple it can be traded if you have a framework. You're not just looking for inverted fair value gap, You're not just looking for the entry reasoning. You want the framework, the narrative. You want the draw and liquidity. The draw is going to be, oh, we took data high. Let's potentially look to then take data low. So if we're going to take data low, you got to find out what model works best for you. Now, I'm going to remove this because this shows that we could have risked $80 to make $300. It's almost a perfect 4-to-1. And look, it melted past the data low. Look where that shit dipped, right? Look, potentially I wouldn't have been getting involved until 10, right? So if we're looking here, all I'm gonna see is, because you do want to also have the 50% kind of indicated consequent encroachment. That level would have been relevant, but let's say you don't have that. what we have right here is a fair value gap. This is the 30-second, mind you. So I potentially wouldn't have taken this. We'll see. But there's a fair value gap there. And then there's another one right here. This is the one I probably would have took. Because what we have is a candle body market structure shift right here. This is the textbook market structure shift that I could see. We also have, this fair value gap. So if you don't know fair value gaps, this is going to be tough. If you can't see a market structure shift, this is going to be tough. If you just use fibs, high to low, once price comes above the 50% level, you're looking for a reason to get short. You could look at this green candle right here, right, as a potential order block because we never violated it. And I don't really know how to explain order blocks properly. It also means, it's also known as mean threshold. How to mark data high and low? Is this the high and low of the? Okay, that's a good question. How to mark it? For me, look what the 30-second candle looks like. That's it. I'm sure, because it's just a wick. The 5-minute candle probably looks the same, but I need to, it seems like supply and demand, but the thing is, you need to listen to the ICT video talking about it and just learn it. Like, I kind of know it without understanding it. And that's kind of messed up, but it's kind of like you want to get away from, I know everything. There's more traders that know a lot more than me. I'm telling you, they know a lot more. But I've been there activating trading and knowing, like, patience. These are you can enter for so many reasons, but you just have to have narrative. But I used to trade supply and demand. I know a trader who lives close by who he's like a millionaire from supply and demand. But it works, but you have to use other stuff, right? He uses supply and demand. He doesn't use ICT, but he uses supply and demand, and he uses quarter points, and he's a swing trader. So every week he's flipping counts. He's still doing Forex stuff, but the trick is he's not really doing Forex. He's usually trading like NAS and US 30. So he's damn near a futures trader on a Forex platform, swing trading. So, and indices and stuff is a lot easier because once they get going in one direction, you basically can just add to them. But essentially, data high to data low. That's the framework of this news trade. Whenever there's news, if there's news 2 to 3 days out the week, guys, that's giving you an idea like, oh, I can frame this type of trade. That's it. Like that's how you got to think. And look how we violated the data low. When we violated this low, does this look like it's going to get retraced? This huge bearish candle. When you see a purge like that, don't think reversal. That doesn't indicate reversal. Like you gotta be aware of your surroundings. When you see a big volume candle like this, that doesn't mean, oh, I'm just gonna buy the data low now. That's not what it means. Especially considering what the other draws were. So if we have additional draws, this was the previous. I think this was previous day's low at that point. No, wait, hold on one sec. Previous day's low was over here. Because this is London. This was previous day's low. So that was the look. Because this was the day that did previous day's high to previous day's low. I don't know why I didn't indicate that to you guys. But here, look. This is previous day's high right here. 3 something. Wait. Because the day opens at like 5 or 6. Either way. Let's just say that's previous day's high. So price opened up above previous day's high. When I say open, I mean by the time 9:30 came, which is the market open, we're above previous day's high. You got to think about it like somebody who trades without a chart. Like when people are on the phone, they're like, get me in above yesterday's high. Get me in above yesterday's low. They're not on the chart. When you think about people who were in when they were on the Wall Street floor, they're referencing like landmarks. You know, when you go visit someone, you're like, oh, I'm by the McDonald's or I'm by the park. They're not referencing 956. Like, they're not mentioning an address. They're saying, like, landmarks. So the landmarks are previous day's high, previous day's low. Where were we at London session? What was London's high? All right, get me long there. That's how people who are trading who don't look at charts are thinking about it. So if we traded that same format, we end up getting in on the wick of the candle. So by us getting in a previous day high and low, we're usually getting in on a wick of a daily candle and that we can hold. When we get in on a data high, data low, you got to understand, when this happens,
immediately there's stop losses below and above it. When we target liquidity, we're targeting stop losses. We're exchanging stop losses. Let me read this. He said, order blocks, lots more good for being profitable. Spent a few years learning actually you get on us. And the best way to keep it, yes, keep it simple. Gotta head out. Yep, have a good day. We'll talk. I appreciate you for joining. Don't be a stranger. Again, we'll do more, but yeah, do your thing, man. But that's what I'm telling you guys. You don't need all the concepts. My point of showing you all the stuff was to say, can you see one or two? And then let's work on that together. If you need help, let's work on those one or two, and then let's build your model. I have a lot of models because I'm like a little OCD. You guys start with one. Let's say the news model, data high, data low. Because there's news 3 days out the week. That means you can find good setups at least 3 days out the week. You could frame a setup there, but you have to think of what PD arrays are you going to use. Are you going to use previous days high? Sorry, no. Are you going to use fair value gap, inverted fair value gap? Are you going to use order block, breaker block? Are you going to use 2024 mentorship, like new week opening gap? And there's a whole bunch of concepts you could use. I'm using order block, fair value gap, inverted fair value gap, and then PD arrays are also the levels. Previous days high is considered a PD array. So they all go together, and when they're violated, that also indicates the market's going in the other direction. I know I'm just saying a lot of stuff, but is there any more questions? You guys still want to keep going? Is it enough for tonight? We can go another time. Okay. Okay, so let's frame what I want to frame. Let me see something. Let me go to a different time frame. Let's go to the daily. Let's do some higher time frame work, because what's good about these concepts is we can frame the higher time frame draw, right? So let's pretend that, let's go back in time. Where's this thing to set it back? Is it this? Candles. It's this. So I want to pretend like the bullish week didn't occur, because this is the daily, this is the whole week. So before the bullish week occurred, right, we're bearish. And if you just take a basic fib level and you go from here to here, okay, we indicated we're in a discount because we're below the 50% level. I'm going to label it discount below 50% level. Possible buys. Okay, just from looking at the higher time frame, does that make sense? So we got the premium, we got discount. From the higher time frame we saw last week, this is how we ended on Friday. We had a bearish candle that put us into a discount. So the first thing we're thinking is, are we gonna reject that following Monday directly up? And if so, is it just going to continue every day, or there's going to be a pullback where we can get in? Pretty much every daily candle, every candle is going to have a wick where we can get in. So if we know that we're potentially going to have to get back to a premium, what we could do is let's go to the 4-hour time frame, right? And then we'll frame liquidity from last week that was important. So let's just say like this wick was important. So we'll put sell side. I'm going from a higher time frame just to frame it, just to show you like you can use all this to get the narrative of what's happening. Sell side liquidity. Right? And then buy side will be the bottom of this wick. And also down here as well. But for the sake of this, we know it's not going down there. We can mark up the PD array that it may have reversed off. So this area here is a fair value gap on the 4-hour. So if you looked and you paid attention to where price closed, you see we closed within a 4-hour fair value gap. Now, even if you didn't see that, you can still take advantage of this, because when we let price print, which I'm gonna let it print, I guess. Okay, this is a 4-hour candle. So look, I'm gonna pause it. Is it paused? Yeah. So what we get here is the same thing I framed two of those other data high low trades with. We get an inverted fair value gap indicating a market structure shift. Now, if you waited until this swing high is taken or this candle body's high is taken, like You could, but you want to be aware of something happening quicker. You want to be thinking that we're either going to sell out of this fair value gap, and if we don't, I'll label it. Let me read the chart. Wait a second. I'm sorry. Fair value gap. So, me too. This is fire. Do you mark liquidity off only wicks, or do you use mark bodies too? The only bodies I usually mark off are like a daily, but technically that's already done for me. But I don't really go in the daily and mark it off. So typically I just use the wicks. Need to go. Nice meeting you guys. Thanks for session, brother. Yes, we'll test the one for yes. Awesome. So what we have here is a fair value gap that gets invalidated to inverted fair value gap, right? And it's not just invalid, it's called inverted. It's an inversion fair value gap. So it gets inverted. Sorry. Inverted to an inverted fair value gap. That's really what happens here. And why that's relevant is that's a market structure shift. And what did we frame before? We framed that potentially we're going to be going bullish out of this area. So this is possibly going to confirm it. Let's see. Mind you, let's look at the time. This is Monday. 4 hour. So look. Let's see. That's probably a news candle. But anyway, so what happened was we used that fair value gap to go bullish. The trades you could have framed off of this are the 50% level of it. You could have framed any trade off this 50% level. Now I'm talking a higher time frame to you guys. This is telling us we're bullish. We're seeing all this bullish momentum. What we could do is we can mark off fair value gaps and expect to get back into them to get bullish. Let's see. So look, price tapped into this fair value gap, but not the one from before. So what happens when price doesn't tap into an up, like it creates a fair value gap and then another one, the one below it is called a breakaway gap. And the reason that's relevant, it's not to say, oh, I couldn't get in the trade. It's to tell your ass that there's it's a strong ass trend. If there's a fair value gap and there's another one below it and it can't get to that one below it, it's an extremely strong trend, right? Later on, we may get back to it. But this one right here would be the fair value gap that gets touched. Now, this is a 4-hour time frame, right? This is London session. London session is going to give you most of the retracements for the real push of the day. So price comes down during London session into a 4-hour fair value gap and then goes bullish. And then here's US session within this. I'm going to go to the 1 hour so we could just see a little bit more stuff. Okay. So this day was hard for a lot of people because I think the day before, right, we pushed up and then we created this gap. People thought we're all going down to this gap. In reality, there's a 1 hour fair value gap here that we never broke. And I told this to my friend. I was like, listen, there's a 1 hour fair value gap that's right there when we opened on price. And I keep everything yellow like an idiot, so it's very hard to see this. I'm sorry. But the point is, if we can't break past this 1 hour fair value gap, it's highly unlikely we're going to go into a bearish market flow, meaning we're still bullish, even though price keeps going up. Everyone's like, why do we keep buying? Bro, if the PD arrays aren't getting violated, we got to keep going that direction. So we say to ourselves, all right, this one's not being violated. How can I get long? And time-wise, how can I get long? Well, you got to think about it. I'm gonna pull it back so we can pretend like we're gonna trade it. Give me a sec. Where's the arrow thing? All right, I'm gonna bring it back to this, and we'll go on the 15-minute. Need to go. Makes perfect sense. Okay, yeah. So again, all these levels I already have marked. We got London high, we got midnight close, we got previous day's high, we got London low, right? We dipped into the 1 hour fair value gap, right? We didn't close below, like there's no candle body close below. I'm gonna let the candles play out. Okay. What's that? Hold on. Okay, this is the 15-minute time frame. For me personally, I would have been on the seconds chart doing my work, right? Once we can't close within this 1 hour fair value gap, we're bullish. Once we're bullish, we're looking for pullbacks into fair value gaps, and depending on the time frame, that's when your stop loss is not going to be as nice. So this stop loss wouldn't have been as nice because we're on a 15-minute time frame trying to frame this. If we entered in the middle of the fair value gap and used the candle that created the fair value gaps, wick low or body low as a stop loss. In this case, I guess wick low would have been safest, or you could use, let's just use wick low. It would have been a 66 point stop, right? And the target would have been at least 1-to-1 you'd have to target. So let's just say 66 for 66. Now, it's not the best trade. To get the best trade, you're going to have to go on the lower time frame. Mind you, this can still make you $160 with one contract, not to mention scaling in. I'm going to go down to the 5-minute time frame. I'm going to delete this part so we can look at it again. So that fair value gap we drew earlier, we're going to refine it, right? So let's put it here. This fair value gap right here, right? And then we're going to use the bottom half of it anyway. So if we took the trade based on this, and then we framed it based on the stop right here, like this candle right here, it's a 40-point stop. So that allows for more risk to reward. So right there, we doubled, almost tripled the RR of the trade by going on a lower time frame and framing the stop loss. The stop loss is, I'm going to put it in the chat, stop loss is fair value gap low or candle that created fair value gap wick low. So it really depends on how the price action is forming, right? If you have a level that supports you, which is right here, we have London low. This green area, this whole green box is London. This red line automatically is London low. I wish it said it so you guys could see it, but that level is that fake retail support that we're all used to. Like, oh, support. The real support and resistance are these levels, the session levels. So what happened is this push down is technically a smart money reversal, which is a market maker thing, which you guys might not know. But all you need to know is if I see a fair value up in a higher time frame, there's probably another one on the lower time frame. You just keep zooming in. On the 5-minute, we saw the risk is only going to be 38 points. Let's go to the 1-minute. Just to prove how you could take the higher time frame concept and tighten it up. So if you look closely within this, because again, we're coming at the market at 10, right? Because that's the time I want you guys to start looking at the market, 10, or at least to trade it. So the last thing we have, and I'm going to go back to here. This last up close candle creates a breaker block, right? That's a market structure shift. That's telling you price is going to go bullish. Breaker block. Believe it or not, I caught that trade from that low. Because I'm literally on a 30-second chart at the time frame because there's levels there, and I'm just paying. Oh, this is a 1-minute, but you want to pay attention to any order blocks and breaker blocks close to the time we're supposed to be trading. Don't look back to the end of. Don't scroll back to Asian looking for some shit. Look at the relevant price action and say, wait, is there a market structure shift happening at a key time? Okay, that makes sense. If 9 o'clock starts the 4-hour candle, right? 9 o'clock. You got to understand how this candle is building, because it's all about power of 3. If 9 o'clock is back here, right? The first thing we do, 9 o'clock, sorry, it's right here. We push up, push down. This is where now we have a wick. Push back up. So then now there's a wick on the downside and we're a bullish candle. Then we melt. We take this out. So now we're a straight bearish wick. And then we pull up. This is all a 4-hour candle building. We pull up. We're basically like a doji. And we pull back. And we're doing all this. And by the time we go here, we're a bullish candle. By the time we're a bullish candle, it's too late for you to be trying to buy. You have to be buying when we're building up to be the bullish candle. So this breaker block down here is the first sign to start buying, right? And then on the higher time frames, we didn't really see that we could buy until like that fair value gap. Now we could zoom in and then create a tighter fair value gap technically. Right here, there's like a teeny little fair value gap you could use technically, which would give you a super precise entry. But let's just say we're going to be realistic and use this one right here. I don't know if you guys can see that. This candle right here creates this wick and wick. They don't overlap. This is the fair value gap. You put a buy side trade right here on the fair value gap. You put the The stop should be the low of the low of the candle that created the fair value gap. So you could have waited till it wicked it, entered the trade, and put it at the low. Or, considering how tight we are, and you see this red line here, let's say you put it below London low, right? 25-point stop, $50. And then you're targeting this high. So it's a 3-to-1. Potentially more if you target that high. But ultimately, be content with a 1-to-1, 1.5-to-1. Because once you add to them, it becomes a 2-to-1. I know it's a lot of stuff, but let me remove the drawings. What the point I was trying to make is, between 10 o'clock and 11, there's going to be a move. But you got to know what side of liquidity was ran. So if we're coming to the chart at 10 o'clock, this sell side, I think it's buy side. I'm sorry, I always mess the name up. I'm sorry. This buy side was taken, right? And then this order block here was used to push. Just because it pushes doesn't mean it's over for you. You're just waiting for a pullback. Even if you just use a fib level, you can anticipate a pullback. It comes back under 50%. All these complicated things to do the same thing, to be honest with you. But yeah, I just want to be honest. Like, it's a lot. But what you want to use, I can help you refine that, if that makes sense. But you got to make a decision what you can see. You know what I'm saying? Like, if you don't see fib levels good, then don't use fibs. If you see order blocks good, then use order blocks. If you don't know what you see, you need to study more, and then you need to practice seeing more stuff. But I think that'll be it. Are you taking limit entries, or do you typically go mark? I do it all. I do. In the videos I put on YouTube, there's somewhere I have a limit order at an order block, and then I get executed with barely any drawdown and go into right to profit. And I do markets. I did markets on Friday. Yeah, you got to just study more, because you got to be able to see at least a fair value gap, an order block, a breaker block. You got to be able to see those three at least, because everything I do kind of uses those. Now, if you don't want to use those concepts, that's fine, but you'll be kind of like handicapped, especially being around any ICT people. It's all under Bruce Profits. So if you just type in Bruce Profits, now I don't have the best educational videos out there yet at all, but definitely just feel free to reach out, and then after you take some trades, if you want to say, oh, is this correct, I can help you. Because I'm here every day between that 10 to 11 and 2 to 4. I'm at least looking at it from 2 to 4. And I'm only trading MNQ. So I don't know about the other futures pairs, but if you're looking to trade MNQ, I got you. But yeah, I thank you guys for coming, and I'm gonna do a lot more, but sometimes I get busy. Thanks a lot for sure. Divergence, SMT divergence. I do use SMT. So SMT, this is what SMT is. SMT is when one asset does one thing and the other one doesn't. I kind of use that. So like, for instance, ES and MNQ, there'll be like SMT. So that's the only kind of divergence I use. I don't use divergence from like an indicator. The indicator is, okay, how do I frame it? I don't frame it the best, I'm sorry. Essentially, on NQ, for instance, if we're at previous day's high, and this chart doesn't show the indicator, so it's kind of messed up. So it's kind of irrelevant what I'm trying to show. But, for instance, ES might run previous day's high, and NQ might not. And we might have a reversal anyway. And it's like, why do we have a reversal? ES already ran previous day's high. Sometimes one pair does it. Sometimes one currency leads the other, and usually pair like NQ and ES, right? Or like dollar, SMT, smart money technique. I'm gonna have to send an ICT video. Let me look up the video and put it in here, because I can't. I'm gonna give somebody else who describes it better to you than me, because it's gonna be a waste of time. I'm gonna be saying something dumb, and it's gonna be like, wait, why didn't you just send the person who knew exactly what that meant to me? Yeah, so let me find that. I'm looking at the video right now. This one will be good. All right. All right. That's a good SMT divergence thing. Essentially, one of them's gonna look like they're going down, while the other ones look like they're going up, and it's like a trick. It's almost like one already hit the target and the other one didn't, and then the one that hit the target starts to reverse, so the other one just starts to reverse, and then we just end up leaving an area of liquidity that we thought was going to get hit. It gets left. Now SMT is really valuable on higher time frames or like at specific higher time frame levels, like previous days high, previous days low. But how much points do you target and base it risk? I don't really have a specific target. I more so just look at risk. I look at risk and then I always get out early. I always leave a lot of money on the table. I always end up like mad because I never worry about the profit part. Like I have a daily goal of like 100 something twice. And sometimes when I'm in a trade that's really good, I'll just keep adding to it. And then if it overshoots it, I'll make a huge profit and just close it and stop. Like, because sometimes the target situation can get you caught up. I'm just going for 1-to-1. So if I'm risking $100, I at least need 100. But if I get 100 and I know that there's still a lot more of the curve to go, I'm gonna add to it and I'm gonna try to make more out of it. But I would say just go for at least like 1-to-1, risk 250 to make 250, or 150 to make 150. Do you trail your stop loss? No, because in futures, I have not mastered that, so I don't trail it. I just leave it. I don't even go break even most times, and I'm profitable. So like, maybe I'll be way more profitable if I go break even, but you don't have to be a king of master, like managing your positions like that to make money. That's just something that in Forex they kind of, you gotta go break even, you gotta go. Like if you look at ICT's videos, he only goes break even when price is like melting a certain way, and price almost comes back to wick him out all the time. Like I can't trade like that. It's too stressed, and he uses mini, so I just don't relate. I have gone break even in the past, but for me personally, with trailing drawdown, it's like by the time I'm going break even, it's like damn, I should just take profit. Like why am I even? I don't even want, and I'm kind of reckless a little bit with how I add. So when in futures, the break even really wouldn't make sense. In Forex, it's like, all right, you get in another trade, so you could put a stop above it. In this one, it's like the whole entry is pulled up, so you just got to put a limit to be like, all right, if it hits this, take off one contract. So that's my truth. I don't do that. Okay, 1-to-1 is good. 1-to-1 is the beginning of everything. ICT Sun made money doing like 0.5-to-1, meaning he was losing more than he made and still got multiple payouts. So you don't need to be obsessed with a win rate or winning too much. Just add to the winner. Listen to Tom Hogarth, Best Loser Wins. He talks about adding to winners, and it's definitely important. We got a good salad. But what else? Let me try to think. So you want to think about the time of days you're available to trade. When you get there, you want to look for liquidity being ran, and especially if it's at that like the higher time frame levels, it's better. Previous day high, previous day low, session high, session low, midnight close, Asian, no. But Shermaine Trades, he's a very good mentor who I recommend, and I told multiple people around me to pay for his mentorship because he was doing it for $100 lifetime, right? But he sits there and he does streams every day, and he sounds like ICT. Right? I'm a better trader than him, I'll say that. But he's a better orator. He's a better teacher. Shermaine Trades. I'll pull up his Discord and share the link so you guys can join the free Discord, and then you can pay him. Because right now I'm not charging or doing anything because I'm not organized. He's organized. He's doing it like that. Right now I'm trying to just get comfortable teaching and talking to people about everything, building up my group. Let me see. Give me one sec to give his information. Okay, you guys are still there, right? All right, one sec. Sheesh. The thing is, man, like I'm all over the place. So it's like people pick up stuff from me, and that's cool. But I'm not the person where you can model like this one specific. Because I literally, if you ask me why I entered, I'm like inverted for Vega or unicorn. Like I got all these different models. When you're trying to just get it going, you need one person with one model. And what Charmaine has good, he has a really good Asian model. So if you want to trade Asian, follow him. I do not trade Asian. Matter of fact, most days I trade 30 minutes or less and I'm done. Like, I'm not sitting here like most of the days I'm on the phone talking shit. Like, I'm just talking shit to traders. I'm not really doing anything, to be honest. I'm just managing my son. And if I'm on a DGen day, I may trade till like 1 o'clock or something like that. Or I have to come back in PM session. But I only come back later to either make a little extra money or because sometimes I give signals to like people that I know. So then I have to find the trade for them. But for me personally, I try my best to be done early. But I appreciate you saying that I teach good. I'm welcome to always tell you more stuff, but I can point you to better teachers. That's the thing. I'm not going to waste your time. There's better teachers, and I can help refine some of those things. But I don't know what else to show. Let me think. Is there any more questions? Maybe I can think of resources to bring up or other things to assist. I know I'm just showing a basic ass chart right now, but the point was that I was trying to frame here was that we were bullish, and that we were creating a bullish sentiment. Oh, I appreciate it. I think it's all recorded, so I'm gonna put it on YouTube so we can reference back to it. I have my OBS recording, and then I'm telling you, once you keep studying it, and then you need to create your own model. See, this is the thing I didn't really say here. Like my model. The first model I had that got me funded 25 accounts was Turtle Soup. Turtle Soup. I was just selling the high of London and buying the low of London. I wasn't even doing previous day high, previous day low. I recently, in the last 3 months, started doing that more. So I was doing Turtle Soup. And then I met this guy named Billy. And he taught me about Unicorn, which is the second stage distribution within Market Maker model. I'll send that Market Maker model video is in this group. It's in the watch these videos. And I'm sorry, the watch the videos, I don't know why, that's the freaking intro, so it doesn't make any sense, but hold on. It's at the top of it, but all these videos at the top are gold, and I'm going to drop this one to you guys. That Market Maker video, it has everything you need because it has all the different entries, and that's really the point. Like, there's so many entries, you got to know where you are within the curve. Right, so if you go click this, if you click that link, it brings you to the Market Maker model video. And if you scroll up, you'll see some more videos that are relevant. And there's breaker blocks. I'm gonna organize the Discord better over the weekend, or hopefully soon. I'm gonna have someone help me. But yeah, that's really it. Like, I just linked it in there. So go through some of those videos and watch these videos, even though I should have had that somewhere else. And then you'll realize, like, I'm putting all the information for all the models. But if you look at the Market Maker video, he talks about every model. So Turtle Soup is the first one. Then there's a Smart Money Reversal. Then there's the second stage. Then there's a third stage. There's so much different stuff going on, right? But you don't need all of it. You just need a piece of it. And it's like, once you create a narrative of what you like, what you're willing to do, you can see how much I'm talking, right? I don't got patience. So I need a trade where it's like, I'm catching a falling knife. That's the trades I would like. But then eventually I'm like, I want a surefire trade. And that's what Unicorn is. Because what it is like, I can see Unicorn immediately when I look at the chart. It's a breaker block and a fair value gap. So right here is a Unicorn. We got a fair value gap and we got a breaker block. These wicks create a breaker block on another time frame, which, yeah, this is a breaker block. The last set of down close candles or up close candles and a downtrend. The last green candle here creates a breaker. And then this fair value gap, right? The overlap. You just want overlap. You could even make the box just the overlap. It doesn't even matter. It's up to you. But essentially you take a buy here, right? And you just ride that. The Unicorn. Where's that video? Oh no. Yeah, it's all that stuff is in there. If you click the watch these videos and it goes to the top, let me see what's in there. We got the breaker blocks, we got the Unicorn, we got everything in there. For value, you got 22 mentorship, discount premium. There's some examples of me marking it up. And I didn't talk about it here because there's specific stuff that I look for. Like, I look for a list of 4 things. I didn't talk about it. 1 hour run. Here, I'm going to drop it in the chat. And this was sauce that I maybe should have brought up, but I kind of got away from this a little bit. But this is definitely like the most clean, like direct what you're looking for. A 1 hour run. So let's frame one of these. I'm gonna erase all this shit and frame one, and that way you guys can have a perfect example. Skip back to the regular time. Okay. How do I exit out of this? Exit. Are you guys still good? It's just 1, 2. Okay, bet. I'm just gonna show this, and it'll be recorded so you can look back, and we'll definitely do more. And again, like, go study those people I mentioned, and then if you have questions, come back because I'm just here to help. But what we're looking for is first, what videos help you identify daily bias? Daily bias is irrelevant. All those, I think I put in a daily bias video in there, but it's so, I have to look at like a billion videos. I don't have a specific video for daily bias. I don't think. Let me see something. Justin Werlin might have a good video for that. Yeah, Justin Werlin has a good video, and then also TT Trades. I'll share it to you. TT Trades is a really good resource, and Justin Werlin. But for me, it's kind of simple if you know the PD arrays, right? And also, sometimes daily bias is irrelevant because I don't know about you, but in futures you really can't hold overnight. So with the daily bias is cool and all, but you just got to catch a directional movement and then be done for the day. But I'm gonna just label the 1 hour run. I'm gonna show you what a unicorn looks like. Right? Give me 1 sec. I'm gonna find one. Technically, there's a unicorn here. Let's see if we can mark it up. So the unicorn is gonna happen typically between 9:30 and 11. So we can frame this as a unicorn, right? What we're gonna have is a 1 hour time frame. Can you guys see we're in the 1 hour? Right. We're gonna have a 1 hour time frame. Liquidity ran. So this is still that same area from before with the fair value gap that was mentioned, but we can frame it as a unicorn as well. This is a 1 hour level because it's a wick here that gets ran, purged by a candle body and a wick. That is considered a 1 hour run. You would label that 1 hour, and there's multiple 1 hour runs you can label, and I'll show you because there's a lot of variability to it, which you can use. 1 hour run on liquidity. Now I put it in the chat. These are the steps you need. The best ones for beginners. 2022 model. That's the best one for beginners. But once you get that, we can level you up to some turtle soup. But 2022 model. So we got the 1 hour run on liquidity. That's the first thing. We can also use this level right here because this is a candle body that gets ran by a wick. The whole wick doesn't have to be ran. It could be the candle body ran by a wick. But let's just use this one over here. We're only looking after it's ran during our 9:30 to 10 and all that window, right? This is specific to a time window. The first step, I'm gonna put it on the chart too, so we can have it right here as well. Hold on 1 sec. So we got the one is missing. The 1 hour run, the 5-minute stop hunt. So a 5-minute stop hunt is basically a 1 hour run, but on the 5-minute time frame. It's a stop hunt. It's the same concept as price running liquidity, and we're looking for it after the 1 hour run, right? So we're gonna zoom in to find it. Hold on. So technically, I'm gonna be very technical here, guys. A run is a body being purged by a wick. This right here, and you could change this to red now so that you can indicate the 5-minute, right? So let's say 5-minute stop hunt, 5-minute stop hunt. Now this is gold, guys. This got me over 80,000 in payouts. Stop hunt. So 5-minute stop hunt. The turtle soup got me funded until I learned this model, and then I stopped trading. I stopped trading turtle soup for a while. So we need these. We got the 1 hour run. This was a 1 hour time frame that was ran. Then we have the 5-minute stop hunt, which is a candle body or wick, like this wick right here, being run by the candle next to it. Hello?
Oh, I think I lost service. All right, I'm gonna stop the recording here. I'm gonna